What's up, everybody? Rob Gill, Epic Financial Strategies, and I'm here with Teresa Trigas-Pfefferle. She's in the house, and she's going to tell you, as the money train goes by, how to buy investment property with no money down. So, Teresa, let me ask you a question. On the last video, we touched in a little bit from hard money lending to private lending. Can you tell all the folks a little bit about private lending?
I love private lending, Rob.
It sounds unbelievable.
This is a phenomenal topic. I get so excited.
I'm ready.
Okay, so there's different aspects to private money, right? So we brought this up in the context of how to buy an investment property with no money down, right? So the beauty of this is that there are many people that you may know in your life who have their money sitting in a bank earning, what's the current rate of return?
Less than 1%. It's like that movie, Less Than Zero, in the late 80s.
It's painful.
Remember Tristan? Even though it was from another movie? But go ahead.
It's painful, right?
Yeah, less than 1%.
So what you do
That's horrible.
So the premise is very simple.
By the way,
right?
less than 1%, they're still paying taxes and fees. Go ahead, I'm sorry.
It's almost like negative money.
It is like less than zero.
It's like negative money.
There was a movie about that.
There wasn't Robert Downey Jr.
Yes.
Yes.
And he shuffled off the mortar coil at the end of the movie in the backseat of the car. But go ahead.
No, it's true. Yeah. All right. So here's what you do. I'm going to make it really simple, right, Rob?
That's the only way I could think.
All right. So really simply is you start talking to people around you who have money that they want to invest and earn, let's say, 10%, right? So you go from less than 0 to 10%. And you ask them, would you be willing to be a limited partner with me on a purchase if I paid you 10% on your money?
I mean,
it's
no one's going to say.
literally that simple.
But is the person that's going to give the money up, they're not guaranteed for that. It's not a guarantee investment, right?
It's a guaranteed investment because it's a private note.
So the person, if I'm borrowing money from you,
Yeah.
and I say, listen, I'm going to give you 10%, I guarantee it?
Yes.
What if I go broke?
Well, you have multiple ways you can handle it.
Are you suing me, or what does that look like?
No, well, you could put a lien on the property. You're like basically a private mortgage holder.
So wait a second.
So everyone says banks make the most money.
Yep.
So you basically find someone who wants to be a bank for you.
So if I find the property, it's worth $100,000, and I need a $20,000 down payment. I'm going to say, hey, Teresa, if you loan me $20,000, I'm going to give you 10% or $2,000 on that money.
Yes.
But I'm also going to let you be in first lien creditor position. Is that correct? On that property?
I do it differently,
Yep.
personally, because I have relationships, and we do it on the back end.
What does that mean?
We do it completely off the books.
Okay,
Right.
but assuming for that,
for the average person, they're going to be basically holding a mortgage for you.
Yeah.
Of that 20%, and I would do it after, so I would put them in second position.
Do they charge points on that? So if you're loaning me, if I'm borrowing 20 grand from you, you're getting.
That's the difference between private and hard. Hard money, you're always paying points. Private money is usually friends and family.
And what's the interest rate?
Acquaintance. Right now, I would say 8 to 12%, depending on the situation.
All right, Teresa, that was phenomenal. Do me a favor.
Yeah.
If you could just break down an example, I need to borrow 20 grand from you.
Okay. So you come to me, Rob, and you say, Teresa, I've secured a property.
Yep.
Right? And I'm looking for a partner. I need $20,000. And for that $20,000, I'm going to give you a 10% rate of return on your money.
Yep.
It's that simple.
Are we buying that? Are we buying?
So you buy the property, you add them to the partnership in LLC, right?
Yep.
So they're a limited partner, and you pay them their interest on their money over time. And you can decide for yourself, do I want to accelerate a payoff where they're only in this property with me for 5 years? Or do I want to keep them as a long-term hold and just continually, perpetually pay them that 10% on their money they've invested?
And you're paying them with the renter's money, correct?
Correct.
Okay.
So you structure it into the deal.
So let me ask you a question. If somebody has a cash value life insurance policy that has a whole bunch of cash in it, and let's say if you have a cash value policy, you have $100,000 in there, and I ask you for a $20,000 loan that you borrow from your policy, let's say at 4%, to loan me the money, your 100 grand in a policy is still earning a rate of return.
Yes.
Now you're giving me that 20 grand and you're charging me 10% on that 20 grand. So you would have double rates of returns versus if your money was in a whole life policy versus if it was in just a simple savings account.
There's a few things to think about, right? So you may have someone that's close to you that is willing to lend you the money for interest only, right? And in that case, you put it on the books, you keep it off the books, you do whatever works for you. Obviously, the federal government would have an opinion on what to do with that. Right?
Always.
If you want to take a limited partner, you can take a limited partner. You add them to your LLC, you buy it in the name of an LLC, and that's how you hold the property. And then they're making a portion of, you're building in a portion of the rental income into paying them a percentage on their money. Or they could be a mortgage holder for you, and they could mortgage the whole thing and just file a mortgage lien, or they could just take a second on it for the down payment. Does it make sense?
Now, yeah, I mean, all three of these scenarios, are they easy, to really be able to learn on how to do this? Is it a simple phone call? How should they learn how to do this? Is there a book?
I would say, well, I mean.
Not from you, but just in general.
Yeah, well, we have a mutual friend, Ken Van Loo.
Yep.
Global Real Estate Strategies. He teaches people how to do this effortlessly.
Yep.
So I would check him out for sure. You want to have like a savvy team around you, right? You want to have an attorney who understands this, right? Because not all real estate attorneys are created equal. You want to have a real estate agent who's familiar with investments and this type of thing so that they can guide you on that end. And you want to have a CPA who's guiding you, right? As always, you want to have that financial service provider of some kind guiding you into that space.
Yeah, as always, it sounds like it's important to make sure all the planners are on the same page, speaking the same language. The oars are going in the same direction in the boat, so your thinking is based on logic, math, and science, not emotional timidity or a gut level hunch. But it sounds like, everything is a process, everything is a structure, everything is about understanding how money works. For some of the folks that could be listening right now, what if, is there like a blueprint on how to go to somebody with money and overcome the fear of asking? Because they may know a lot of people with money, but never went to them, and all of a sudden they're coming with real estate deals.
The interesting thing is, I would put like a one-page prospectus together of what you're looking to do with your real estate investments, right?
And do you kind of factor in the cap rate and the cash flow and all that other stuff in that one pager?
You could absolutely do that, right? Yep. And then I would start having the conversation, start sharing with people, I'm going to be investing in real estate and I'm looking for partners. And there's no better partner, in my opinion, than the people you know, like, and trust. And why would you not want to build wealth together?
Awesome. If you want to be the person that really understands how to become your own bank and make these multiple rates of return off the same dollar, the 8s, the 10s, the 12s, while still earning a rate of return inside your insurance policy, go ahead and click the link below. We have the Financial Freedom Map, and it'll take you through the exact action steps that you need to do.